Hi everyone, welcome to pallavijhastocklens. So in June 2025, we know that Torrent Pharmaceuticals announced that it would be acquiring a majority stake, around 46.39% stake in JB Chemicals and Pharma. So we'll discuss the deal details first and then about the companies and the synergy benefits that comes in, okay? So after SunPharma acquired Ranbaxy in 2015, that is around 10 years back, this acquisition is seen as the largest deal in India's branded pharma space. Okay, the deal will take place in two phases. In first phase, Torrent Pharmaceuticals will acquire 46.39% stake, priced at rupees 1,600 crores each. The total value of which comes to 11,917 crore rupees. Okay, this Torrent Pharmaceuticals will acquire in JB Chemicals from KKR. It is important to note that KKR is a private equity investment company, and KKR has been able to transform JB Pharma's financials and performance over the last 5 years. Okay, that is, it needs to be understood that KKR, the private equity investment company, so that is the one that acquired JB Chemicals and transformed it over the past 5 years, because of which JB Chemicals is showing good performance and progression in the past 3 years, that is from FY22 to FY25. So after acquiring 46.39% stake in JB Chemicals, Torrent Pharma it has an intent, okay, to acquire 2.8% from some of JB Chemicals employees under employee stock option. Now this 2.8% amounts to around 44.9 lakh equity shares, the value of which is 719 crore rupees. After this necessitates, because this is acquisition of a majority stake, this necessitates 26% open offer. So the open offer for 26% stake in JB Chemicals will be for rupees 1,639.18 per share, okay, and the value of which amounts to 6,842.8 crore rupees. So if you're going to total this, that is 46.39% stake valued at 11,917 crores, 2.8% stake through employee stock options amounting to 719 crores, and after that open offer for 26% amounting to 6,842.8 crores, the total value comes to around 19,480 crores something. So mostly for this 26% open offer, most of the brokerages have recommended or predict that shareholders will not tender it. So even without it, Torrent Pharmaceuticals, they have 46.39% shares which they're going to acquire, plus 2.8% shares that they're going to acquire from employees. So it makes to 49.1% shares, and 2% here and there. Once they acquire 51% shareholding, that becomes a majority shareholding. So this was phase 1, and under phase 2 there would be merger. Merger is JB Chemicals shareholders will receive 51 shares of Torrent for every 100 shares of JB Chemicals held. Okay, and Torrent Pharmaceuticals expects that this deal will be done in like 6 months time frame. So the equity valuation amounts to 25,689 crores. That is, JB Chemicals in Pharma is valued at 25,689 crore rupees. Okay, so first now we'll see some details about Torrent Pharma as to what it is strong in, and then we'll see JB Chemicals' strength, and then we'll go on to see synergy benefits. Okay, so Torrent Pharma is currently at 7th rank in Indian pharma space by secondary sales, and it's in 5th position in India by prescriptions. After this acquisition, that is after this merger, Torrent Pharma will be in 4th position in India pharma market in terms of prescriptions, and it will rank 5th in India pharma space in terms of secondary sales. Okay, what does Torrent Pharma do? So Torrent Pharma is engaged in research, development, manufacturing and marketing of generic pharmaceutical formulations. It markets branded generics as well as generics, and its main 3 areas. It's active in therapeutic areas of cardiovascular, central nervous system, that is CNS, and gastrointestinal. These are 3 major strength areas of Torrent Pharmaceuticals: cardiovascular, central nervous system CNS, and gastrointestinal. Apart from this, it's also present in other therapeutic areas like women healthcare, diabetology, anti-infective, pain management systems, and nephrology, oncology, gynecology, respiratory, and pediatrics. Pharma is present in all of this, but its three major areas include cardiovascular, central nervous system, that is CNS, and gastrointestinal. So if we have to look at the revenue contribution percentage for FY25 in branded generics segment, that is under branded generic segment, India as a geography contributed 56% to revenues and Brazil contributed to 10% of its revenues. And in the generic segment, it markets both branded generics as well as generics. So in branded generics, India as a geography contributed 56% to revenues and Brazil contributed 10%. Whereas in generic segment, if you're going to see, US and Germany contributed 10% revenues each. Okay, and other countries and contract manufacturing businesses, so they contributed around 15% to FY25 revenues. And in India, Torrent has 8 manufacturing facilities. So we saw about Torrent Pharma. So now we're going to see about JB Chemicals and Pharma, okay, like where it stands. So JB Chemicals is currently at 22nd rank in the Indian pharma space. It was at 33rd rank since the time KKR acquired it and accelerated its performance and financial performance and progress in various aspects. Now JB Chemicals ranks at 22nd position in India's pharma space. So in 2020, in the year 2020, KKR acquired 54% stake in JB Chemicals and Pharma, and that's how JB Chemicals has made good progress and profits in the past 3 years. That is FY22 to FY25. Okay. And 6 of JB Chemicals brands feature amongst the top 300 brands in India pharma market. And JB Chemicals also has 16th rank in prescription in the Indian pharma space. So the company has consistently maintained good, strong financial performance over the past 3 years, FY22 to FY25. So for FY25, if you're going to see, JB Chemicals has made revenues of 3,918 crores, which is a growth of 12% year on year. Of this 3,918 crores, 58% is domestic revenues, and the operating EBITDA margin for FY25 was 27.7%, and PAT margin for FY25 was 17%. Okay. So if you're going to see CAGR growth for FY22 to 25, because that is the period it made good progress. So the overall revenues grew at 17% CAGR for this period, FY22 to 25, and domestic revenues grew at 25% CAGR for FY22 to 25, and international business grew at 10% CAGR for the same period, FY22 to 25. So operating EBITDA was reported for the first time in FY25, and JB Chemicals domestic formulations business grew at 20%, which according to JB Chemicals is better than industry performance. If you're going to look at cash on books, so as on 31st March 2024, cash on books for JB Chemicals is 107 crores, whereas if you see in March 2025, it is 689 crores. So such a huge leap from 107 crores cash in books to 689 crores within 1 year. Okay. Also, the company reports that the operating cash flow to operating EBITDA is at 83%. That is, the ability to extract cash flows from EBITDA is 83%, which is high, and JB Chemicals claims that this is one of the highest in pharma industry. So JB Chemicals is mainly known for its flagship brands, which are Silicur for hypertension, Metrogyl, it's an antibiotic, Nicardia again for hypertension, Rantac for anti-ulcers. So these are the flagship brands which JB Chemicals is known for. So JB Chemicals, we should also note that it has strong international presence. It operates in 40 countries and it exports to the US, CIS countries, South Africa and other markets, which will be beneficial for Torrent's global expansion strategy as well as for cross-selling, right? And JB Chemicals also has significant presence in CDMO space, particularly in lozenges segment. So that will add on to Torrent's capability. So if you see, JB Chemicals and Pharma has two strong points. Okay, so one is their chronic therapy segment, and second is their CDMO space, which is strong for them. And now Torrent will also be able to access this strength. Okay, so first one, chronic therapy segment. So what is chronic therapy is medicines that are required for life for a considerably longer period of time. For example, hypertension, diabetes, medicines are supposed to be taken throughout life. Okay, so market analysts, they sound very good when a particular company is engaged in chronic therapy, if they are producing chronic therapy products, because it's like a long-term asset for them. The patients are for life kind of thing. Okay, so this is chronic therapy. And second is they are strength in CDMO space. Okay, what is CDMO? Is contract development and manufacturing. So CDMO, what they do is they develop drugs as well as they manufacture drugs. Who buy this? Who goes for the CDMO services is big pharma companies as well as biotechs, so that they can focus like completely on innovation, and other things and all can be taken care of by CDMO. Okay, so now we'll see Synergies one by one. So Torrent is currently 7th largest pharma company in India, and after this deal, that is after acquiring majority of stake in JB Chemicals, Torrent will become 4th largest pharma company in India in terms of prescriptions and 5th largest pharma company in India in terms of secondary sales. If you're going to look at market capitalization numbers, JB Chemicals is at 20,112 crore rupees market cap, whereas Torrent is at 1,13,083 crores market cap. So around 3.5 to 4 times bigger market cap than JB Chemicals is what Torrent currently has. In terms of revenues, if you're going to see for FY25, JB Chemicals reported revenues at 3,918 crores, whereas Torrent reported 11,515 crores. So which is almost 3 times than what JB Chemicals has made. This is just to get an overall picture between the two companies that are going to merge. Okay, so combined revenues, once the acquisition is done, once the merger is done, the combined revenue should be around 15,000 plus crore, and the combined EBITDA should be 4,800 plus crores is what is projected. Okay, as far as domestic revenues are concerned, Torrent's domestic revenue, if you see, if it is 56% of the revenues that it has done, and JB Chemicals' domestic revenues is 58% of the reported sales. So combined entities' domestic revenues will be more than 8,662 crores, which is more than 35% of Torrent Pharmaceuticals' current domestic revenue than what Torrent is able to make through domestic revenues. Once it merges with JB Chemicals, it should be able to make 35% more revenues. So as we saw earlier also, there are 2 main strengths and therefore 2 main growth factors for JB Chemicals, which Torrent will utilize going forward. Okay, one is a chronic therapy segment and the second one is CDMO segment. So first we'll discuss what does the industry has to say about chronic therapy segment, how it will grow. Okay. So as far as JB Chemicals is concerned, chronic therapy contributed to 47% of its revenues for FY25. And chronic therapy is a strongly growing area. And JB Chemicals has strengthened itself in anti-diabetics, cardiac, and neuro-CNS within this chronic therapy segment. So according to market experts, industry experts, the chronic therapy segment that is likely to grow at 8.1% CAGR by 2029, and presently chronic therapy segment is growing 2.6 times faster than India's overall pharma industry. Okay, at the pace at which India's pharma industry is growing, the chronic therapy segment is growing 2.6 times more. And this means that whatever pace that JB Chemicals is growing at in the chronic therapy area, it will grow more and more because the industry will grow at 2.5 times. Okay. Within this chronic therapy segment, JB Chemicals' hypertension drug Synergies, so that reported revenues of 785 crores for FY25, which is at 23% growth year on year. And if you're going to look at other brands within the chronic therapy segment, Razel and Azmarda are 2 other brands in this cardiac segment itself. So even these 2 drugs or these 2 brands grew 20% year over year each. Okay. So with this deal, once the deal is done, Torrent will strengthen its dominance in cardiac through these brands. That is the brands that we saw, Razel, Azmarda, Synergies, and other drugs. And it will also strengthen its gastro drug that it will acquire from JB Chemicals, that is Metrogyl. Metrogyl has reported revenues of 342 crores as of for FY25. Okay. So we saw chronic therapy segment. Coming to CDMO segment, CDMO segment has good growth potential and JB Pharma has good presence in it. So according to what JB Chemicals claim in its report is that it is amongst the top 5 global CDMO players and it has good traction in lozenges segment. And one more benefit that Torrent will get by through this acquisition, Torrent will get entry into ophthalmology segment because of JB Chemicals. So as of now, it has no presence in ophthalmology segment. Because of JB Chemicals, it will get entry into this space as well. So if you're going to see for FY25, how much did JB Chemicals report from CDMO business? So that is 446 crores in revenues through the CDMO business. And the company also says, that is JB Chemicals management says that 5 big projects are in pipeline and that will commercialize by the end of 2025. And as of now, the quarterly run rate is 110 to 120 crores and that is expected to grow to 150 crore rupees quarterly that is 150 crore rupees quarterly run rate by FY26. Also, another report that we have, according to BCG February 2025 report, that is BCG reported in Feb 2025, that Indian CDMO market will grow exponentially and that it is expected to grow from $7 billion presently to $14 billion by 2028, and this $14 billion by 2028 will amount to 4 to 5% of global market, which means there is enough space for CDMO segment to grow. There is enough space for JB Chemicals to grow. Now that Torrent has access to JB Chemicals, even Torrent will grow because of CDMO space access. Okay, so if you're going to look at the overall synergy benefits through this acquisition, number one is that acquiring JB Pharma will strengthen Torrent Pharmaceuticals' domestic portfolio because Torrent will now have access to JB Chemicals therapy products in cardiology, gastroenterology, and pediatrics. And this merger also gives Torrent access to enter JB Chemicals products in ophthalmology space, in nephrology space, and in women's health space, that is IVF. Okay, so these are the markets and the products that Torrent Pharma will get access to by means of acquiring controlling stake in JB Chemicals. So this merger will also give Torrent access to JB Chemicals' strong international presence because JB has presence in more than 40 countries across Asia, Russia, CIS region, Latin America, Southwest, and West Asia. So Torrent will also get access to JB's CDMO business. Along with international business presence, CDMO business is also something that Torrent Pharma will get access to, which has high growth potential. CDMO business has high growth potential, like we discussed earlier. So another synergy from this deal is the cardiac medicines and the gastro medicines that JB Pharma makes, JB Chemicals and Pharma presently makes. Torrent will have access to it, and it will get additional customers in the regions where JB Chemicals exports its cardiac and gastro products. It will get additional customers there and therefore additional sales. So Torrent Pharma will start monetizing this, and the effect will be like it will start showing in FY26 numbers, and the full effect will start showing in FY27. That is in 1 to 2 years time frame. Okay. Plus, as we know, there would be integration of manufacturing and supply chain facilities. Once there is manufacturing integration and supply chain integration, synergies are bound to be there, right? That is overall, if you see, for Torrent, the benefit from this acquisition is that Torrent's position in branded generic market grows because Torrent gets access to JB Pharma's strong brands like Silicare, Rantac, and other brands that we discussed. And Torrent also gets access to JB Chemicals' international reach, international market, especially the US. And for JB Chemicals, the benefit is that Torrent provides JB Pharma larger platform for growth because small companies that are not yet grown fully, they have good potential to grow. So that is the benefit that JB Chemicals will have from Torrent Pharma. It will have more room to grow and expand under Torrent. Okay, and whereas in manufacturing and distribution there would be synergies, capacity synergies. Okay, coming to manufacturing capacities, so Torrent Pharma has 8 manufacturing facilities in India as of now, and JB Chemicals also has 8 manufacturing facilities in India, manufacturing facilities or manufacturing capacities as of now in India. So total becomes to 16 manufacturing capabilities in India. and the ability to serve global markets grows drastically because of the combined manufacturing capacities, right? Portfolio synergy is very high, and there is a lot of scope for cross-selling synergies. So what is cross-selling? It means you're marketing additional products to existing customers. Now that is cross-selling. All this will have an impact on synergy numbers, which we will see. So geographically, if we see, Torrent is strong in US, Germany, and Brazil, while JB Chemicals brings in consolidation of US, and JB Chemicals also brings in Russia, South Africa, and a lot of emerging markets. So this is a very big thing, that you can sell your products now more internationally to customers. Okay, so Torrent's ability to get more out of their portfolio and globally be able to cross-sell their products is going to be very high. And all this should translate to improved and enhanced revenues and profitability. Now coming to the main part, which is the debt issue. So coming to this deal between Torrent Pharmaceuticals and JB Chemicals, the debt component is very high, because of which there is concerns. Okay, so we'll address that. So Torrent might fund the deal through a mix of internal accruals, debt, which is around 10,000 to 12,500 crores, and equity through the QIP route. Okay, so it has already obtained the approval from shareholders in May 2025 for 5,000 crores QIP. So it can be a mix of internal accruals, debt, and equity. Debt, how much? 10,000 to 12,500 crores. So if the deal is an all debt deal, that is, it doesn't go by equity, it's an all debt deal, then the combined net debt could be around 14,500 crore rupees. That is Torrent's present debt of 3,202 crores plus the debt that it will take to further this deal, which is 10,000 to 12,500 crore debt that it will get. In that case, it will amount to 14,500 crores debt. And this 14,500 crore debt is 3 times to net debt to EBITDA. Now, based on FY25 numbers. So 3 times net debt to EBITDA is a cause of concern, right? And current Torrent's net debt to EBITDA, if you see, it is 0.6. So through this deal, if it goes by all debt deal, then it will go to 3 times. It will become 3 times. So whatever be the structure, the debt component in the balance sheet is going to be high because of this deal. Because of which it is to be seen whether market experts are worried, they have concerns, or they are okay with it. So market experts are okay with it. They are not overly fearing about this debt component because of the synergy benefits, because of Torrent's ability to enhance brand's value and translate it to revenue and profitability, and because of Torrent's track record of being able to manage debts well and settling them off in a shorter period or shorter time frame. Okay, analysts or market experts, they're not worrying too much about this debt, that is 3 times net debt to EBITDA. They're not worrying too much, and what they say is, given Torrent's steady cash flows, up to 2 times of EV to EBITDA leverage is manageable, and market analysts also feel that Torrent can clear its debts within 3 to 4 years time frame. This debt, they'll be able to clear it off within 3 to 4 years time frame is what analysts are predicting. So what does Torrent's management have to say on this mounting debt is that Torrent's executive said that Torrent expects to reach a peak leverage of 2.8x by FY27 in a worst case scenario, but expects it to reduce it to below 0.5x within 2 years post merger. What the management is trying to say is that even if in case of worst case scenario, the peak leverage would be 2.8x by FY 2027, and within 2 years post merger, it will be able to get off with the debt. Okay. Further, Torrent management says the balance sheet is strong and we don't foresee the need to tap our approved QIP route. Thus, we don't have to raise equity. We will be able to get through with debt only. Earlier in May 2025, the company has already approved shareholders not for 5,000 crore QIP route. Moreover, if you see in ICRA report, what it is mentioned is that it anticipates strong cash flow generation from Torrent, and it also expects healthy ROCE for both Torrent as well as JB Chemicals, and therefore negative trigger on debt concerns is a temporary thing, and that it will be weed off. So industry experts are also of the opinion that how the deal structure is done with, whether it is fully debt or it is debt plus equity. So that will determine the trajectory of this, and that will determine whether it would become EPS accretive. Okay, so if the company goes for all debt, if Torrent goes for all debt, then net debt to EBITDA will be 2.5 to 3 times. But in case, and analysts are of the opinion that in case it is a mix of debt and equity, which will be more likely the case according to them, then it is 1.2 or 1.3 times net debt to EBITDA, which is a very comfortable number. Okay, and if it is a mix of debt and equity, then it would become EPS accretive mostly by FY27. That is within 2 to 3 years of time frame. Given Torrent Pharma's EBITDA margin is higher than JB Chemical's EBITDA margin, and given Torrent has had strong record of cost rationalization as seen with previous acquisitions of Elder, Unichem and Curatio. What is cost rationalization? Is I'm able to effectively utilize my cost expense in the most optimized way or the most optimal way. That is cost rationalization. So given Torrent's history, it has a very good track record of domestic acquisitions and turning them into or enhancing their brand value and translating into enhanced revenues and profits. Okay, so what is the track record is that Torrent has had record of cost rationalization, and as seen with previous acquisitions, after acquiring it, there is huge margin expansion within 1 to 2 years of the acquired brands. Okay, so the same is expected with JB Chemicals also. So industry experts believe that the combined entity is expected to make EBITDA margins of 34 to 35% in 3 to 4 years time frame, and therefore it is believed that Torrent Pharma should be able to flip JB Chemicals margins towards the upside. It's not just that industry experts are not fearing the debt, the mounting debt, but on the other hand, they're very confident, they're very optimistic about Torrent Pharma's performance going forward. So industry experts are not concerned over debts, and they feel that Torrent will be able to manage debts effectively as is seen from the past records, and they're very optimistic about Torrent's fast growth trajectory from here. So if we look at industry experts' rationale, what they say, Torrent has proven track record of successful domestic acquisitions over the past decade. And with past acquisitions, they've been able to get better cost synergies, better EBITDA. They've integrated companies and made brands more profitable. So as seen with previous acquisitions of Elder, that is, as seen with previous acquisitions of Torrent Pharma, which is Elder, Unichem, Curatio. So Torrent Pharma always enhances the brands that it acquires. In this case, Torrent acquiring brands like Nicardia, Metrogel, Silicar, Rantac from JB Pharma, all these are very big brand names, and there is huge scope to grow. And therefore, these brands are also present both in cardiac as well as gastro segment. So there is huge scope to grow, and Torrent will make good profits out of it. So there's no meaning worrying about debt. Okay. And lastly, coming to what do brokerages have to say on this deal. So IIFL and even other market experts believe that JB shareholders should not tender in open offer and should wait for Torrent shares post-merger. HSBC has given buy rating of 3775 and Nomura has given neutral rating and the target is 3580. And JP Morgan, it has given overweight on Torrent Pharma with the target price of 3,800. So that's about Torrent and JB Pharma deal. Thank you for watching.